Okay, welcome, guys. It is Sunday night, August 3rd, in preparation for Monday, August 4th trading day. Before we jump into the market here and some of the internals and things like that, some things I'm seeing, and keep in mind, I'm gonna lay myself on the line tonight as far as a little bit of a pre-call for tomorrow, but we'll see how that plays out and how much shit you guys give me over it. But let's go forward here for now. But so we're doing the interview of Roy Longstreet, interview of a commodity trader. Roy Longstreet did the viewpoints of a commodity trader, which we're going to get into that book shortly, but wanted to finish here. So the interview is taking place by Intermarket Magazine, and we'll just use them as IM and Roy Longstreet as Longstreet. So IM says, "When did you first make a lot of money?" Longstreet said, "Well, it depends upon what you call a lot of money. A lot of money to me is several million dollars. In the early 1930s, $1,000 was a lot of money to me. And it took me a good period of time before I realized there was as much danger in success as there is in failure. I did not realize it. Usually the money I would make, I would give right back." IM says, "When was the first time that you made so much that you overwhelmed yourself?" Longstreet said, "Well, that did not occur until the 60s. It actually happened first the other way around. I lost $1 million in a day, in just one day in the bean complex." IM says, "How did you get to the point where you could lose that much?" Longstreet says, "I steadily built it up, all of it through trading, making money over months and years. Obviously, I had more than $1 million because I continued to trade, but I feel like I learned more from that experience than I did from making all the money over the many years prior to that." IM says, "How did it feel to lose 1 million in one day?" Longstreet said, I have some property west of here. I go out there on the weekends. Fortunately, it happened on a Friday, so I was able to seek refuge on my property, away from it all. Over the weekend, it really began eating into me, so I called a friend of mine. "Do you know Tom Jordan?" "No," says IM. "Well, the only way for me to convey to you anything about Tom Jordan would be to relay this story. This story describes him better than I could ever describe him. Tom Jordan was from New Orleans, and he was one of these individuals that based his actions primarily on emotion. He wanted to get married. This was in 1946. In order to get married to his future wife, he had to go to New York where she lived. She had a mother who was very protective and who wanted to find out what her daughter's life would be like married to Tom Jordan. He told me that he had enough money to get to New York from New Orleans and enough money to pay his room, but not to buy food. He somehow finagled his way into her mother's heart so that she served him and paid for his food, which was one meal a day. He needed money, so he got up enough courage to ask her to lend him $300 to buy one contract of cotton. This was in January. She turned him down. She was wise enough to invite a banker to one of the meals with the three of them to discuss his request. The banker advised her, "No way." This was January, so I'll skip over some details. And by October, the great cotton market ensued in which Tom made and lost back over $30 million. Made and lost back over $30 million. IM says, "How?" Longstreet says, "How? He borrowed enough money somewhere to get started. Anyway, I called him up over the weekend." IM says, "He'd certainly be the type of guy that would make you feel better about losing only 1 million." Longstreet says, "Exactly. Anyway, I was still so shaken from my experience. So I called him and I asked him to tell me how he had done it. I was interested in learning the technique, how he pyramided. He said, 'I don't know. All I know is that I knew something about cotton.' That isn't important. The important thing for you to know is that I am here now. The other important thing for you to know is that I broke two brokerages. They went out of business because of me, but it did not stop me because I had an account with a third broker." Uh, Longstreet says, he continued, "Don't feel that you have to do it my way. I can't tell you what my way is. All I want you to know is that something I do worked for me. You're going to have to do it your way, no other way, until you learn to do it the way the way, which is a process of trying your way, failing, not giving up, failing and not giving up. So let me repeat that. No other way until you learn to do it the way, which is a process of trying your way, failing, and not giving up. Those were his words. I can't tell you what the way is. All I know is that I failed. And if you fail and you acquit, then you're through. But you can fail and keep on. IM says, did you go back in the office Monday morning and trade? Longstreet said, no. I went back in the office and called him up again. I said to him, well, I hate to ask you this question because you already told me that you don't know, but I still want to know. Is there something I can do to make this back? I lost $1 million on Friday. That's a lot of money for me. It's not 30 million that you lost, but it's a lot of money for me. He said, I can't tell you, but I can give you a clue. When I lost the 30 million, I called my broker. I talked to him about what had happened, and I asked him, do you have enough money in my account so that I can buy the limit in wheat? I asked him why he picked wheat, and he said, I don't know. I just did. I realized that if I was going to continue, I must continue. I had to buy something. Tom Jordan told me one other thing that was important. He told me, whatever you do, don't piddle. Make it big. Whatever you do, big enough that it commands your entire attention. IM says, so you knew what you were doing before losing this money, but you wanted to make 30 million, but you wanted the 30 million trade. Longstreet said, no, I was not after 30 million. I've never traded for money. IM says, then why weren't you satisfied with what you were able to do? Longstreet said, do you know what the Fibonacci teaches us? Well, it's the geometric growth pattern of numbers. Well, yeah, what does that tell you? Asked Longstreet. IM says, well, that the numbers increase, as the numbers increase, the growth rate of the next number is geometrically increased. Longstreet says, what does that tell you about human nature? IM says that as we accumulate wealth, we always want just a little bit more. Longstreet said, not just a little bit. The more we have, the more we want. Fibonacci observed this studying in pyramids. Each that was built was bigger than the one before. Being a mathematician, he observed that the progression was such that pyramid building must be stopped. Just like in trading, if you do not control yourself, you must eventually go broke because it is impossible to feed your mind, your imagination. IM says, you've lost $1 million in a day. Have you ever made that much in one day? Longstreet said, no, not in one day. But within 4 months after that episode, I made over 3 million. I guess I took to heart a lesson learned from Alonzo Stagg, in which I had relearned from Tom Jordan, not to quit. IM says, so it was then that you learned how to pyramid. Longstreet says, yes. The ability to pyramid is, I think, something which is inherent in someone, or it is not. You cannot learn the instinct to pyramid. To pyramid intelligently, to a pyramid with discipline, that you can learn. IM says, what was the key to your success? Discipline, not pyramiding, says Longstreet. IM says, when you are planning a campaign, do you know ahead of time which price levels you will add on? Longstreet says, no, and I don't want to know. That leads to expectation. At one time, I used a mechanical approach where a certain price level would cause me to add on, but I want to eliminate as much as possible this appetite for expectation and to be satisfied with possibilities. IM says, when you would want to buy, would you keep adding on in equal units? Or would you add on in greater size or in a percentage of the total position? Longstreet says, well, I add on in equal units, but I add on only if I really believe myself correct. IM says, how do you approach a campaign in terms of pyramiding? Longstreet said, well, that gets me to another lesson. Sorry. Let me make sure I didn't have. Oh, yeah, I think I did have a stop there. So, yeah, let's stop there for tonight, and we will pick back up on that tomorrow night. All right, so jump in the markets here. So this is the 2 period rate of change here on our 2 period rate of change. Remember we did the kind of leveling out here as we went up here. Then we had our first flip down on this green day, the seventh day of this extended run of this wave five. The eighth day, we did another close back down and finally closed red. Then we did a 1, 2, 3 days down in the 2 period rate of change. Then we did a 1 day flip up, and of course that was that end of the day off of earnings release there at the end of the day that shot that up and really took that out. Then we came in all-time highs for the next flip down of the 2 period rate of change, and I still have this red line here sitting. And this is where I said that, hey, if we flip down below that 2 period rate of change would flip down, because when I was doing the homework the night before, our 2 period rate of change was up here pretty high, or flipping back up here, continuing up. Of course, we did flip down on that 2 period rate of change. So now we've had 2 days flip down of that 2 period rate of change. We've also had two negative PF3s in an overall up channel. So this is the negative PF3, second negative PF3 in an overall up channel. And we did a wide range 7 here, and also I'm kind of jumping ahead in my notes here a little bit, but also this was a 20-day low off of the price action we put in on Friday. So that took out the past 20 days 20 days low, actually over 20 days low is what we took out there. So I have a short-term pivot of to flip up this 2 period rate of change is at 62.42, 42.50. So we're here, 42. Wow, that's way down here. So 62.42. So yeah, we kind of flipped back up because we actually even opened above that. And here's where I'm gonna put myself on the line. What I'm looking for tomorrow is to see if we do a false breakdown, basically take out these lows here, false breakdown, do a flip down of this 2 period rate of change, only to come back up and come back up against Friday's lows, and then move up and have a 2 period rate of change flip up is what I'm looking for tomorrow on Monday. So the other thing that's interesting here is if you so this is the setting on sorry, give me 1 second. There we go. So the other thing I want to make note of is you can see in this LBR 310, we're still positive on that slow line. We have yet to break down on that slow line. We've come down on the fast line a couple times here, but I think that's coming in our near future. But as of right now, we're still positive on that. We've had this pretty good run down, from the spike high up here at 64.6850 down to 62.39. It's more than 39.11, 62.39 and a quarter, I think it was. 39.50. So 62.39.50 and the highs of 64.68. So in 2 days, we've gone from the highs to 20-day lows in just 2 day period of time. We're below the 20 period moving average. We're below the 30 period moving average. And this pink line here that we're coming into, this is a Fibonacci retracement of the last 50 days. So the last 50 days price action, that's a 38.2% retracement of the last 50 days, which I went ahead and put it here also. And it kind of shows you that we could be bouncing off that 38.2% of the last 50-day price action percentage there. So those are all things that I'm looking at. Are we going to come down here and test below this a little bit and then move back up a little bit tomorrow? That is my assessment for one of my plays tomorrow. All right, so I had said we hit the 38.2, we hit the 20-day lows. Showed you, put myself on the line saying I'm looking for a false breakdown there and then a move back up under the prior day lows. We looked at the daily LBR, showing that that's still positive here on the daily LBR. And the other thing I want to look at, let's look at the continuation contract at ES, because it's going back on the front month. It doesn't pull in a lot of the data, and so it kind of skews the data. So I'm going to do the continuation contract at ES. And you can see here at ES, let's look at this. One thing I want to look at is these volumes here. So you can see that we hit this volume spike when we were hitting these lows here. Well, we're back up here hitting these volume spikes here again. So we're hitting the top echelon of these echelon. Wow, probably not the right term to use there, but anyway, the top of these volume spikes here coming into this move down on Friday. So, when we look at that, we had a good move up on Thursday, higher than back in, back early June. So the end of July and early August here, we had those volume spikes. So that could be interpreted as kind of capitulatory type moves on the daily chart. So that's another thing I'm looking at is the overall volume on the ATES, compared to these volumes back here when we were hitting those capitulatory volume spikes at the bottom here. Now we're coming up pretty high on this volume, but you see we're way up here, so this could be a short-term capitulation there. Okay, and then one other thing I wanted to show on a possible holding here is on the SPY. So this is the internals, which we'll get to in just a second. But this is the SPY price action. I've marked off these levels here. So this is the prior high back in February of 2025. So February 2025, we kind of fell off here through April, and then we shot up, took out those prior highs. I'm not saying this is going to bounce up and make all-time highs again. I'm just saying we could get a little bounce from here. I've got those two zones marked here, this 1323, and then I marked this prior low here that happened on 716 on the SPY. So this 716 low was at 618.05. And so we're just a little bit below where our low was on Friday. And then I have the 613.23. So I'm kind of anticipating maybe a move back down here, test closer to this prior low. This is, again, quite a bit of travel over just a 2-day period. And that's where I'm kind of expecting or anticipating. Let me pull over the 65,000 tick chart. So here's my 65,000 tick chart. You can see we're doing a little bit of bullish divergences here on that spike down. If we do one more spike down, that's what I'm looking for. So really, I even wrote it out here. Must trade a minimum of 15 ticks or 4 to 5 points below this prior low. Then place a buy order here at this prior low for a move back up into this price consolidation, overlap here. I would look for a move back up into here. So I'm going to play that on one of my other accounts for a little bit of a longer hold type thing and just see how that plays out. Other than that, I'll be, trading the base hits on most everything else. All right. Okay, we did that. Oh, the internals on the so on the VIX here, we had these prior lows down here at 1470, which hit on the 29th. We moved up 3 points off of that. That's what we were watching for on Friday. Once we moved up above that, it was just, open the floodgates to the downside as the VIX continued that move higher. Well, now we've made a 2190 high in that VIX. So 1890 is 3 points down. So just kind of keep those numbers in mind tomorrow. If we're trading in the VIX down below 1890, that's a 3-point move down. We kind of backed off that a little bit on Friday. So there's quite a bit of room. We have quite a bit of room to roam, whether we go up or down, off of that. So, again, cautionary tone. It's a Monday, so keep that in mind. But all right, that's all I have for tonight. Thank you, guys. Sorry it's a little bit longer tonight, but that's it for tonight. We will follow up tomorrow. Happy trading. Trade safe. All right, bye.